Hello, my name is Brenton Harrison with Ultra Borrowers Academy, an online course where we help people with a mountain of student debt take back control of their loans. We're here today to talk about what might happen if President Biden actually forgives those student loans. Let's get started. If you're watching this video, it's been a crazy past couple of weeks for our country. I'm recording this video on January 11th. So in addition to the fact that there was a crowd of angry people who were trying to overthrow our government last week, another thing that actually happened that has political capital is the Democrats took control over the Senate by flipping both of the Georgia Senate seats. Now, if you're unfamiliar with certain ways that legislation is passed, there are typically 3 steps that have to take place for a law to go into effect. 1, it has to pass the House, then it has to pass the Senate, and then it has to be signed into law and effect by the president, him or herself one day. So one of the consequential effects of having now a Democratic-led Senate and a Democratic-led House and a Democratic president-elect is that President Biden will conceivably be able to pass more legislation that he has in mind without worrying about being voted down in either 2 chambers. One of the areas that Americans are hoping that the new administration provides some relief is in regards to student loans, specifically having a certain amount of student loans forgiven. Now, I know many of you were hopeful that the reports that Chuck Schumer was advocating that President Biden, through executive order, forgive $50,000 of student loan debt for all borrowers would go into effect. But I think the more realistic number are the reports that we're seeing that suggest that the new administration is going to recommend that not only do they extend the payment and 0% interest freeze that's been going on for the past few months, but that they would also forgive up to $10,000 of student loans for eligible borrowers. $10,000 of student loan forgiveness certainly isn't the $50,000 that many people had hoped for, but $10,000 is still a lot of money and very beneficial to a lot of people. The question becomes, are there any consequences, specifically tax consequences, that will come up as a result of having this money forgiven? What happens when you have student loans forgiven? How does it typically work? So what I thought we would do is we would go through a few examples of what typically happens when you have student loans forgiven, and also when you have money given to you with the intention of it being paid towards your student loans. To be clear, these are examples of things that may not come into place based on how the administration chooses to deal with it. They have the ability to set the guidelines for what will happen in terms of any taxable impact or having no taxable impact on the amount that's forgiven. But by going through these examples, I do think it will be instructive in terms of giving you a look ahead into some ways that you could be impacted if you have a portion of your student loans wiped away. If you've seen any of our prior videos, you'd probably say that our most frequent topic of discussion are the income-driven plans offered by the federal government. And there's a reason for that. In my opinion, it's one of the most complex topics that you can cover when it comes to student loans. But there are so many people who are on these plans that I want to make sure you know the details in and out in case it's what you're using to repay your debt or to have your debt forgiven, which is the most important part of this video. Because under the income-driven plans, the payment that you make each month has literally no connection to your loan balance. It's not based on paying your debt off in a particular amount of time. It's literally just based off of finding a percentage of a number called your discretionary income and asking you to pay that. As an example, you could have a plan where you make $10,000 a year as discretionary income. And if your payment plan requires you to pay 10% of that, you're going to pay $1,000 for the year, which is $83.33 a month. Well, that's the good thing about having a low income as you try to repay a large amount of debt. You could have a low payment under these plans as a result of having a low discretionary income. But the disadvantage is you can have a payment that's so low and a debt that's so high that the amount that you're paying each month doesn't even guarantee that the interest that's growing on your loans will be covered by your loan payments, which means you could technically be paying on your loans and watching your balance increase as a result of not having a high enough payment. Now, the last part of these plans is that they all require you to pay on them for a certain period of time. They'll say if you pay on these loans 10% of your discretionary income for 20 years or 25 years, then after that period of time, we will make you stop paying. You do not have to pay us after this period. And while the payment that you're making may not be enough to actually pay your loan off in that period of time, the great thing is at the end of whatever period you're designed to pay, any remaining loan balances will be forgiven. There's no limit to that. If you have $25,000 or $250,000 of student loans that are remaining on your balance at the end of the repayment period, it will be wiped away regardless of the balance. But it comes with a caveat because the forgiven balances that are left at the end of your repayment period are considered realized and recognized income in the year of forgiveness. So let's break down these terms. What does realized mean? Realized income means that you have a financial benefit to you that actually happened. Something that made you better off financially occurred in this year, which means that the event was realized. But it is not recognized income until that financial benefit is taxed. Let's look at an example, and let's assume that we have someone who has been paying back their student loans under the pay-as-you-earn plan, which is one of the income-driven plans offered by the federal government. Now, under this plan, you have to pay 10% of that discretionary income number for a period of 20 years. And after that 20th year, any remaining student loan balances will be forgiven. So let's zoom forward and assume that it is this person's 20th year of paying on their loans. And in this year, they have income amount they actually brought home of $100,000. And at the end of the year, the 20th year, they will not have to pay past this period of time, and they see that they have a remaining loan balance of $10,000. So that $10,000 will be wiped away, which means that it is realized. They have had an event occur in this year where there was a $10,000 economic benefit that was granted to them in the form of this forgiven debt. But it will also be recognized, meaning it will lead to a taxable event. And when they file their taxes for this year, it is going to look as if they earned not just the $100,000 that they actually earned in income, but also the $10,000 that was forgiven on their student loans, which means that their taxable income will be $110,000 instead of the $100,000 that they actually earned. The forgiven student loans look on their tax return as if they earned it. It was realized, meaning it happened, and it was recognized, meaning it is now taxable to them as income. The second area where we can find some examples of you getting a benefit towards your student loans is when you have an employer who gives you money with the intention of it being used to pay your loans. This is just called employer loan assistance or employer education assistance, and it can come in many forms. Now, prior to the pandemic, any money that your employer gave you specifically to pay off student loans was treated as taxable income. It was something that you would have realized and recognized. If your job gave you $10,000 to pay towards your student loans, it would look like you earned that $10,000 as well. Whereas you could get a tax break and not have to pay taxes on that amount if it was given directly for things like tuition or school supplies or things of that nature. Employer loan repayments, taxable. Employer education assistance for things while you're still enrolled could be something that you could avoid taxation. As a part of the CARES Act, eligible employers can offer up to $5,250 in tax-free educational assistance per employee to things that are not only tuition reimbursements, but now include student loan payments. When this first came out, I had a lot of excited entrepreneur clients and self-employed clients who had student loans, and they were thinking, okay, well, I'm my own business, so I can give myself $5,250 to pay my loans, and the company won't have to pay taxes on that $5,250, and I, as the owner employee, won't have to pay taxes on that $5,250 either. It's not that simple, unfortunately, and I would say it's very unlikely if you're an owner employee that you'd be able to get any large amount of benefit under this plan. And if you're self-employed with no employees, you can't take it because of some limitations that were written into the law. We're actually going to do a video about this in the future to show you why it's unlikely. But for now, just understand that if you're highly compensated or if you are an owner employee, this really isn't for you. This is more for someone who's a rank and file employee who's looking for their employer to add some benefits to the things that they have at their disposal. Before those employees, let's look at an example of how they could benefit from this on the employer and the employee side. Now we're going to assume that we have Jane Doe, and she's earning a salary of $100,000, and she has employer loan assistance that was given to her of $20,000. Her company gave her $20,000 with the intention of that money being used to repay her student loans. Now, she cannot avoid taxation on the entire $20,000. Remember, the limit is $5,250 per employee. But what she can do is she can subtract that exclusion from the amount given to her. And if we take $5,250 and subtract it from the $20,000 of benefits, we can see that instead of her having to pay taxes on the full $20,000 as if she earned it, she will only have realized and recognized income of $14,750. So let's go through our terminology again. She had $20,000 of benefit that was realized. There was an economic benefit of $20,000 that occurred in this year. But because of the exclusion, she only has $14,750 that is recognized, meaning it leads to a taxable consequence in this tax year. While this isn't something that you're going to be able to take the lion's share of in terms of benefit if you're the owner or a C-suite executive, I am hopeful that this is something that employers start offering more frequently as a benefit to their employees because it's something that's desperately needed. But this last area of debt discharge or loan forgiveness or loan assistance is actually the way that I hope the incoming administration chooses to handle any amounts of student loan debt that they choose to discharge. So what is this plan? It's the Public Service Loan Forgiveness Plan, which is also something we've discussed very frequently because public service loan forgiveness is one of the best ways, if eligible, to get rid of student loan debt, that's federal debt, without impacting yourself negatively financially. Public service loan forgiveness is a forgiveness program offered by the federal government that forgives the loans of public servants who have made 120 qualifying payments while meeting certain requirements. What does this mean? Basically, it means that if you're an eligible full-time employee of a qualified nonprofit or a government entity, and you work for that entity for 10 years while repaying your loans under certain requirements, you can have the entirety of your remaining student loan balance forgiven in full. No limitation as to how much can be forgiven. Doesn't matter what's on that balance at the end of that period, it will be forgiven. And for those of you who think this program doesn't work or it doesn't exist, it absolutely exists. The great thing about the public service loan forgiveness is that the remaining balance is going to be forgiven with no tax consequences. It is realized income that is not recognized. So let's go back to our example and let's assume that it's the 10th year of an eligible borrower who is applying for forgiveness under the public service loan forgiveness program. They have $100,000 of income and they have at the end of that 10-year period a loan balance remaining of $50,000. Now, under public service loan forgiveness, this $50,000 will be forgiven. It will be realized, but it will not be recognized. And at the end of this year, for tax purposes, they will still only have $100,000 of taxable income as opposed to the $150,000 that it would be had this been forgiven under the income-driven plan program instead of public service loan forgiveness. Hopefully you can see why this is the preferable way of having $10,000 of student loan debt forgiven. It definitely wouldn't be fun to have $10,000 wiped away, but then have to pay taxes on that $10,000, which means you'd have to come up with that money from somewhere and stick it to the side, or hope that you have a tax refund that's big enough to just take care of that burden. So hopefully someone in the Biden administration will watch this video, take a tip from me, and this will be the way that they choose to handle the debt if they follow through with this plan. My name is Brenton Harrison again with Ultra Borrowers Academy, an online course where we help people with a mountain of student debt take back control of their loans. If you haven't already, subscribe to our channel and subscribe to the notifications so you know when new content is posted. And if you're an Ultra Borrower, if you owe a mountain of student debt and you're looking for a plan, you're looking to change your relationship with your student loans, then head to ultraborrowers.com and check out our courses, our mini course, our free downloads, so you can get on the other side of this mountain and talk about the time when you were an Ultra Borrower. I'll talk to you soon.